Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 385 on July 25th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Lithium Americas Corp, TeraWulf Inc, and Red Cat Holdings, and we discuss three new trades on Faraday Future Intelligent Electric Inc, SoundHound AI, and Kohl Corporation. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the markets once again finished at all-time highs for weekly closes. The Dow Jones Industrial Average grew 559 points this week, closing at 44,901 points on Friday. The S&P 500 index picked up 91 points, ending the week at 6,388 points. And now it's time for the topic of the week. The topic of the week is planning the next 12 months. I don't know about you, but I'm a bit of a planner. And if you're a planner, then planning the next 4 months doesn't sound too extreme. But for those of you who are not planners, you probably think this is a weird thing, especially to plan the next 12 months. But my birthday is coming up in the next few days, and I always use birthdays as a time to check in on life. I look at what has worked, what is currently working, and I get honest about what is not working at all. Then I plan the next 12 months. The plan never happens the way I expect it to, but it makes it easier for me to have a target to focus and aim at over the next 12 months. This also applies to my trading. I've altered my trading style over the years to achieve different goals. I see my life as a boat on a big body of water. Slight changes in where I point the front of that ship, the front of the boat, lead to huge differences on where I land and when. So as I take time to ponder the next 12 months this weekend, I challenge you to do the same. If there are things that you want to change, you have to take a different course of action to change them. For instance, I want to get better at playing piano over the next year. That's going to require signing up for piano lessons, possibly even in person. Finding a coach with more experience will help you shave years off of achieving your goals on your own, no matter what the endeavor, especially trading. And to that end, I am also looking to work with a handful of option traders who are beginners, or some of you who have been self-taught this entire time, maybe just reading some of the books I grew up reading, but possibly missing the deeper understanding that would help you if you had some coaching. And if you want to understand why I make the trades on this show, or how I find them, or what other trades I tend to do that I don't mention on the show, just send me an email. We could definitely have a phone call and discuss them. I have a video course that has helped dozens of people fast forward their trading results. I also have offered one-on-one coaching for some listeners. I haven't offered one-on-one coaching for quite a while just because it's a bit of a time commitment for me too. I love teaching, and I learned that by teaching some others, and I love to just help people understand options. I'm still amazed at the number of people who are active in the stock market, especially through 401ks in their companies, or maybe your parents or another relative have left you some stock in a will, but they have no idea. They don't even have like a base level of options education, which to me is how you truly manage your risk in the stock market. So if you're interested in speeding up your understanding of options, send me an email. I look forward to speaking with you soon. And if improving your results as an option trader is in your plans for the next 12 months, shoot me an email so we can hop on a call soon. I'd love to hear your story and see if it makes sense for us to work together. So that's it for the topic of the week, and also a little bit of me introducing or reintroducing the coaching program. Let's go ahead and get into the review of last week's trades. We're going to start off with that covered call on Lithium Americas Corporation, symbol L as in Lima, A as in Alpha, C as in Charlie. At the time, the stock was trading for $3.27 per share. I looked at buying the stock and selling the August 3/2 call at 25 cents, hoping for a return of 14.68% in 4 weeks. Well, shares of LAC dropped 18 cents, ending the week at $3.06 per share. The call option we sold lost 10 cents, leaving us with a net loss of 8 cents if we were to close the trade out immediately. Now, the stock price is still above our break-even point, even though we are at a loss week over week. So with 3 full weeks left until expiration, and since the stock price is still above our break-even point, I would lean towards not making an adjustment. I like to roll the strikes lower if the price movement warrants it, but our $3 strike is still the at-the-money strike right now. So I'll be tracking this stock, hoping for a rally over the next few weeks. If we don't get a rally and the stock does go lower, I'll look to roll the strike lower along with it if the math makes sense. Next up, we have the credit spread on TeraWulf Inc, symbol W as in whiskey, U as in uniform, L as in Lima, F as in foxtrot. At the time, the stock was trading for $5.13 per share. I looked at selling the August 5 4/2 put spread at 21 cents. That could give us a maximum possible loss of 29 cents per spread. Well, shares of TeraWulf increased 4 cents, ending the week at $5.17 per share. The out-of-the-money put spread that we sold is still out of the money. And since our stock price has increased and we have not gone below the break-even price, no adjustments are needed at this point. The position benefits from prices going higher, so we definitely want this stock to stay strong. If stock prices head below the break-even point, we'll look at selling a call spread and turning this trade into an iron condor. But the reason we wait is because if the stock price were to head higher now, the call spread that we sell might guarantee a loss overall when in fact our trade is working out right now. So as long as the options expires with the stock price above the break-even point, this trade will be profitable. So I only make adjustments if the original trade is in danger of a loss. This trade's working out as planned right now, so no adjustments are needed at this point. And our final trade from last week was a debit spread on Red Cat Holdings, symbol R as in Romeo, C as in Charlie, A as in Alpha, T as in Tango. At the time, the stock was trading for $11.27 per share. I looked at buying the August 10-11 call spread for 60 cents. That could give us a maximum gain of 40 cents, or that's a 66.67% return on capital in 4 weeks. Now, shares of Red Cat fell $1.81, closing at $9.46 per share. The in-the-money call spread that we bought is now out of the money, and the stock price is $1.14 below our break-even price, which means this trade is losing money for us right now. Now, keep in mind that the loss is limited to 60 cents right now because that's what we paid for the spread. Sometimes we can make adjustments that increase the maximum possible loss. I would consider one of two things. You can turn this debit spread into a credit spread by selling the $10 strike and buying a strike above the $11 strike. You can sell the 10-12 call spread at 35 cents. This would leave you short the 11-12 call spread. This would also mean that you paid 25 cents to sell a $1 spread. That would double your maximum possible loss to $1.25. Now, you could turn that into an iron condor by also selling the 8/2, 7/2 put spread at 25 cents, lowering your overall risk to a loss of $1. You will have fully recouped the initial investment of 60 cents, but you could still lose the $1 value of the spreads. It creates a wider price range for you to not lose money on this trade. And so I do like this method of adjusting these long spreads. However, you have to be aware of how that maximum possible loss is going to change, how your maximum loss will change as you make trades, make these adjustments. So I'm leaning towards just waiting to see how the stock price moves over the next week. This stock still appears to be trending higher on a daily chart, even though the price went lower last week. Now, if prices continue lower this week, I'll make an adjustment similar to what I mentioned with regards to turning that debit spread into a credit spread and then possibly turning the whole thing into an iron condor, mostly just to take in some more premium and minimize the possible loss. So for now, I'm going to hold off a day or so before I do anything and just see how things are going to shape up or possibly shake up. We still have 3 weeks left to expiration. So I want to be patient, but not too patient. Time is always a factor in option trading. So you can't wait too long to make an adjustment, because if you do, all of the option premiums are going to decrease because there'll be less time calculated into the equation. And since we're already in the trade, looking at making an adjustment, not entering the spread for the first time, we want to collect as much premium as possible if we're going to start making adjustments. So always do the math, always understand the risk. If you need help with any of that, reach out to me. I'll either help you out one-on-one or point you to either the video course or the coaching, to be honest. So the kicker with the video course and the coaching is that it takes concepts and theory and brings them back to practice, application, so that you know how to use them, which is there can sometimes be a gap between reading some of the text, some of the books on option trading, and actually applying them to your actual trading. So that's it for the review of last week's trades. We'll just go ahead and keep pushing through. All trades on today's show will use the August 15th expiration for monthly options in August. So let's get to it. We're going to start off with our covered call on Faraday Future Intelligence Electric Inc. Symbol F as in Foxtrot, F as in Foxtrot, A as in Alpha, I as in India. The stock ended the week at $2.91 per share. I'm looking at buying that stock and selling the August 3 call at 49 cents, hoping for a return of 19.93% in 3 weeks. Now you enter this trade by buying stock for $2.91 and selling the August 3 call at 49 cents. This trade makes the most money if stock prices finish above $3 per share. The break-even price on this trade is $2.42 per share. In real terms, the stock purchase will require $291 and you'll collect $49 for selling the option. Next up, we have our credit spread on SoundHound AI, symbol S as in Sierra, O as in Oscar, U as in Uniform, N as in November. The stock ended the week at $11.71 per share. I'm looking at selling the August 10 put spread at 20 cents. That could give us a maximum possible loss of 30 cents per spread. Now you enter this trade by selling the August 10 put at 55 cents and concurrently buying the August 10 put for 35 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $10.50 per share. The break-even price on this trade is $10.30 per share. In real terms, you'll receive $20 per spread that you sell, and you'll have $30 at risk. Our final trade on the show today is going to be a debit spread on Kohl's Corporation, symbol K as in Kilo, S as in Sierra, S as in Sierra. Stock ended the week at $12.78 per share. I'm looking at buying the August 12 half call spread for 31 cents. That could give us a maximum gain of 19 cents, or that's a 61.29% return in 3 weeks. Now you enter this trade by buying the August 12 call for $1.58 and concurrently selling the August 12 half call at $1.27. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $12.50 per share. The break-even price on this trade is $12.31 per share. In real terms, you'll pay $31 to enter the spread, and your maximum gain is $19 per spread. So that's it for today's show. Thank you guys so much for listening. Thank you for those of you who sent me an email. I also wanted to reach out to Aaron. I'll give you a live shout out because I hadn't responded to your email just yet. You were asking me why I make some of the trades that I make. And it's much easier to explain that on a phone call than on the show. But just know it always comes down to two main things. Almost all of the trades on this show have an inherently long bias. Part of the reason I do that is because I look at the fact that over time, if you look at the US equity market, aside from a handful of periods over time, the stock market has gone higher. Now, if you go back in some of the earlier shows, look, I've been making these shows for about 7 years. So there were periods where stock prices were going lower. In those scenarios, we started looking at buying put spreads and selling call spreads. Those were trades that benefited when stock prices were going lower. But by and large, the market has gone up and up over time. And so I tend to have a long bias. So my trades also, benefit when prices go higher. That's number one. And number two, it's always about doing the math. As long as the numbers work out, I'm willing to allocate a small amount of capital to see if the trade will work. I hope that helps you understand a little bit more. And some of you who are listening, help you understand a little bit more why I make these trades. If you want further help, if you want to understand the math too, just reach out. I love teaching. I love to help people out, and I would love to affect your trading. So hope you guys have a wonderful weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.